Good day to everyone. I am Pavitra Shanmugam with matrix number S61573. Today I am going to talk about deferred taxation for the company Paksan Holding Berhad. Firstly, initial recognition. Compliance with MFRS 112 income taxes. MFRS 112 income tax require business to recognize deferred tax assets and liabilities for temporary differences between the financial statements carrying amounts and their tax basis. Pakistan Holding Berhad financial statements comply with MFRS 112 by recognizing deferred tax assets and liabilities for temporary differences. This guarantees that future tax repercussions are appropriately recognized in the financial statements. Extract from Pakistan Holding Berhad Financial Statement, Statement of Financial Position 2022, Deferred Tax 220,000 and 514, and Deferred Tax Liabilities of 126,000 and 149. For the next part, subsequent measurement. MFRS 112 requires companies to measure deferred tax assets and liabilities using enacted or substantively enacted tax rates at the tax rates that are expected to apply when the asset is realized or the obligation is resolved. Pakistan Holding Berhad meets these standards by calculating its deferred tax assets and liability using estimated future tax rates. Deferred tax assets and liabilities are calculated at the tax rate that are projected to apply in the year when the asset is realized or the obligation is resolved, depending on tax rates and tax rules in effect at the reporting date. Disclosure and presentation in the financial statement. MFRS 112 requires detailed disclosure on deferred tax. Pakistan Holding Berhad makes mandatory disclosure in its financial statement, which include Pakistan Holding Berhad offers extensive disclosure on its deferred tax assets and liabilities, including the nature and amount of each component, change in deferred tax balances, and key judgment or estimates used. Analysis of reported disclosure. Pakistan Holding Berhad's financial statement contain clear and open information about deferred tax in accordance with MFRS 112. The corporation provides relevant data such as a breakdown of deferred tax assets and liabilities, as well as the impact of this balance on the company financial position. For the next question, we need to compare the basic earning per share value for 2 years and comment on the company's basic earning per share performance. According to MFRS 133, basic earning per share is calculated by dividing the net profit or loss for the period attributable to ordinary shareholders by the number of ordinary share outstanding for the period. In the annual report 2021 of Pakistan Holding Berhad, the basic earning per share will be negative 9 ringgit and 45 cents. When a company income in Berhad is negative, which indicates that it is losing money or spending more than it is bringing in, earning per share will be negative as well. Compared to the year 2022, Pakistan Holding Berhad as negative 10 ringgit and 49 cents, where it has slightly decreased to 1 ringgit and 4 cents. This shows that the basic earning per share value has been decreasing from 2021 to 2022. Earnings per share are primarily influenced by a company income and the number of outstanding ordinary shares. If the share count stays the same, an increase in revenue would result in an increase in earnings per share, where a fall in revenue would decrease earnings per share. Since the beginning of 2020, the COVID-19 pandemic has caused serious economic uncertainty in Malaysia and the group's market. The COVID-19 pandemic has caused travel bans, lockdown, and other preventative measures to be implemented in a number of nations. The group retailing activities in Southeast Asia have been impacted by a number of lockdowns implemented and closed companies due to the rising number of COVID-19 instances during the financial period that ended on December 31st, 2021. To conclude, since the COVID-19 pandemic, Pakistan Holding Berhad continued to take proactive steps to monitor and evaluate the viability of the group's retail stores and ventures, as well as to maximize operational efficiency and productivity and implement cost rationalization such as lowering rental and operating costs. The group is carefully monitoring and acting in a timely manner to minimize the COVID-19 pandemic effect on its operation. That's all from me. Thank you.